Well, I'm Leo Yuan. I'm the General Sales Manager at Congressional Volkswagen. A lot of people always ask me this question, lease versus buy. What's the difference? There's really no clear-cut answer to it. It really depends on what the client is looking for. When you buy a vehicle, a new car, you really have three options how to pay for it. You can pay cash for it, you can finance it with a bank or credit union, and the third option is leasing it. Leasing is really another way of paying for the usage of the vehicle. Where a lot of people get confused is they think leasing is renting, and that's not the case. Because renting is, you're just borrowing it basically, and then you have to return it. You don't get to keep it. Now, when you lease it, there's an option where you have first right of refusal to keep the vehicle if you like it. So that's completely different than renting. That's why there's some misconception of leasing. Oh, I'm just renting a car. I hear that a lot, And they also say something like, I don't own anything at the end. And it's true, because basically you're paying for the usage of the vehicle. And one of the examples I always use is, there's nothing wrong with paying for a car full, obviously, if you have the cash. But if you don't, then let's say you want to borrow the money. Most banks these days are looking for a certain amount down based on your credit history, and they will give you some sort of loan structure. And in today's interest rate, let's say 5%, okay? Let's say, for example, you're looking at a $20,000 car, and you want to borrow $20,000 from the bank. Well, as a consumer, how do you want to pay for that? The bank's going to ask you, which term do you want? 36, 48, 60? Nowadays, they even do 72. Well, that's all great, but it requires some down payment, and depends on what kind of monthly payment you're trying to get to. Typically speaking, on a $20,000 car, 60 months is the average term, and some people like to stretch to 72. That's okay too. But if you compare that to a leasing, okay, you can do a 36-month term, and at the end of the term, you're looking at basically half the car. And that's what the math works out to. The manufacturer pretty much have got it down to a science what the car is worth. And 50% is typically the average of most cars after 3 years, assuming the car has normal wear and tear. So let's say if you compare a lease to a buy, if you were going to finance it, you are paying X amount. But at the end of 3 years, you still owe the bank some amount. Well, that's essentially the same thing for lease. At the end of 3 years or 2 years, whatever your term is, there's still a balance. That balance is called the residual value. And that value is determined by the bank based on previous history, auction report, and things like that. That kind of mirrors what the market does. So at the end of the term, that's where the difference is. On a lease, you have a couple of choices. You can simply walk away. After 3 years, you say, I want to try something else. You can just simply hand the keys off, as long as the car has normal wear and tear condition and you didn't exceed the mileage that you originally signed up for, then you simply walk away. The second option you have on a lease is, if you like the car, which a lot of our customer does, at the end of the term, you can get to buy the vehicle at the set residual in the beginning of the lease. Leasing is gaining momentum. Leasing is gaining a lot of popularity because now people can go online and kind of, discover, there's really no catch to it. There's really no downside if you think about it. I always tell people this, I wish everything I do in my life, there's a 3-year contract that I can get out of. I mean, just think about it. Basically that's what leasing to me is. After 3 years, you can decide, hey, do I still want to keep this? Or should I just move on to something else? So that's really the way I try to describe it to customers between leasing and buying. If you buy it, it's yours. You're going to have to deal with the depreciation. You're going to have to deal with what the car is worth at the end of the term. And if you try to sell it, obviously you're going to try to sell it at what the market is. But if you lease it, then you don't have to worry about any of that. For instance, if the market goes down, right now the market is facing a lot of uncertainty. If the market goes up, then maybe the car's worth more, then you might want to keep it. So you still have that equity there. But let's say the market takes a dip and the car's worth less than $10,000, then you simply walk away and let the manufacturer eat it. So to me, there's really no downside. It's almost like the manufacturer is giving you a guarantee of what the car is worth at the end of the term. So the only thing you really have to watch out for is the mileage, because a lot of people, I have seen them get in trouble because they set the lease in the beginning at maybe 10,000 or 12,000 miles and try to get to a low payment, vice versa. What they really should have set it for, if you drive 15,000 miles a year, you should set your lease at 15,000 miles a year, so you don't have to deal with the over mileage. But if you set it at 15,000 and you drive at 20,000 miles, then you got to pay for that 5,000 mile difference. And each mile as a penalty is almost 20 cents a mile. It can add up pretty quick. So that's where a lot of people get confused. Some people have heard a lot of horrible stories about, oh my God, leasing is bad. Leasing, I'm upside down. This really is not, because if you fulfill your term, at the end of the term, you simply walk away. There's never going to be upside down situation or negative equity, as they call it, because the manufacturer is the one who is going to take care of the loss, if I may. And one of the reasons the manufacturer is pushing it, there's a lot of win for them too, because they get to see the consumer back after 2 or 3 years, because they have to do something. They either keep the car or they walk away, but either way they have to come back. So the manufacturer really likes it too. So in my opinion, it's a pretty good win-win. We do a lot of leasing, and when I used to run a BMW store, almost 90% of the cars leave the showroom leasing. Because, let's think about it, $80,000 car, if you're financing for 60 months, that's $1,600. That's a lot of money. But I can lease that same car for probably half of that, $700, $800. That becomes very affordable. That's why leasing is very popular with luxury brand. But even on our regular brand, $20,000 car is kind of the average price for our cars these days. And with today's economy, everybody wants to get a realistic low monthly payment. Leasing is really a good alternative, from buying it and owning it and take the risk yourself. I'm Leo Yuan. I'm the General Sales Manager at Congressional Volkswagen in Rockville, Maryland.